Trump did decide to delay the tariffs on Canada and Mexico. This will bring a short-term relief in the market. After that, I think we are again going to see a bit of a sell-off. The IPO market has dried up. I think a lot of companies going forward will delay their IPO plans because now they will not be able to. Hello guys, I'm Paris, the options guy, and welcome back to the No BS Trading Podcast. I hope you guys are doing great. And what are we gonna talk about in this week's episode? Because nothing much has happened, but there are still some important data points that need to be noted and that needs to be talked about. So first of all, we are going to talk about the unemployment data that came out last week in the US markets and how that can affect the markets in the coming time. And then we are also going to talk about the inflation data that is coming in the US markets next week. And then finally, we are going to talk about the recovery that we are seeing in the Indian markets recently in the last week. Will that recovery sustain, or are we again going to see a sell-off after this and that recovery is just a pullback or not? So we are going to talk about all of this in today's episode. But yes, without any further delay, let's just start with the episode. So talking about what happened in the previous week, first of all, I released a video. So go and check it out. It is about a Japanese bank that can crash the global financial system. So that is a very interesting video. I think you should definitely watch it. It will be a very important one. So do definitely check it out. I will keep the link in the description. And also one more thing, next week or a week after that, I'm bringing a video about the next wave of investments or the next wave of multi-bagger companies that can be made in India. Okay, so I'm going to talk about where will the money flow going forward in India once this bear phase is over. Where will the money flow? Because a lot of people think that it will be in consumption, the India's growth story, consumption stocks and stuff, but actually that is not the case. The money will flow somewhere else. So definitely keep an eye out for that video and do subscribe if you want to watch that video. But anyways, that out of the way, we had the unemployment data on Friday and unemployment rate came out at 4.1% for the month of February, and expectations were that it would come out at 4%. So slightly higher, and the markets did react negatively, but by the close, the markets did close higher. And I think that was mostly because of short covering. But yes, that was the only data point. Also, Trump did decide to delay the tariffs on Canada and Mexico and up until April 2nd. So that is a bit of a relief. And I think what this will do is that this will bring a short-term relief in the market, in the US markets. Because if you see, since the day I posted my video about something coming bad, Nasdaq is down 10% in a straight line. Dow Jones on the other hand, I think is down like 5-6% if I'm not wrong. I'm not exactly sure about the exact number, but yes, Dow Jones is also down heavily and the fall has started since the exact day I posted that video. So I think this is just a short-term relief that the market is going to get, because of which you might see a recovery going forward in the next few days. And after that, I think we are again going to see a bit of a sell-off again starting in the markets after that. Because again, the things that I talked about in the video about something bad coming, those things do not get resolved in just a single day. So those are some sort of fundamentally bad things, and I think those things will continue to affect the market in the coming few days. It's just that we might see a little bit of a recovery going forward in the next few days. So those are the things that happened in the previous week. Now let's talk about the things that will happen in the next week, which you should definitely keep an eye out for. So talking about what is going to happen in the next week, first of all, we have the CPI data for the US that is on Wednesday, and CPI is expected to come out at 2.9%. Previously, if you remember, last month CPI came out at 3%. So people are expecting that CPI might slow down a little bit, just a tad bit, but I think CPI will continue its pace and maybe go a little bit above 3% in the next week. And as I said I don't remember, I think 2 episodes away, that if CPI starts to go above 3%, that is when I think you will start to hear some real, concerns about the US Fed starting to raise rates again, not cut rates, raise rates again. So definitely keep an eye out for CPI. This will be a very important data point for the next week. And then on Thursday, we have the PPI. Expectations are that it will come out at 3.4%, 0.1% lower than the previous month. But as I said that, Only thing that you need to look out for is CPI actually next week. PPI I think will follow CPI also, but mostly if CPI comes out bad, then I think the markets will react badly regardless of how PPI comes out. So these are the two major data points that you need to look out for in the next week. Aside from that, there is nothing really that you need to look out for. But yes, these times are a bit sort of not like very eventful times. I mean, yes, there are events, but those events are actually happening in the US and not really concerned for the whole world, right? Because Trump is doing a lot of things, but I don't think all of the announcements and the things that the Trump administration is doing will be like very very effective, and like not everything is really that important to talk about, but anything that will be important will be talked about. So don't worry about that. If there are any announcements that are going to be very like important and stuff, then definitely I will talk about them in this on this podcast, but I will not talk about all of the announcements that Donald Trump makes. But yes, those are the things I need to look out for in the next week. But yes, now we don't really have any IPOs that are coming in our markets. The IPO market has dried up, and I think for the right reasons, as everybody is now not going to get such high valuations that they used to get even just like 3 to 4 months back, right? Because the market has corrected. So now I think a lot of companies going forward will delay their IPO plans, because now they will not be able to get those good valuations, right? Or very high valuations from the market. So I think that is why a lot of companies will go on to delay their IPOs, maybe until the market recovers. And because of that, you will not see a lot of action happening in the IPO market, especially I think until Diwali, right? Because I think after Diwali is when I think you can see a bit of a pickup happening in the IPO market again. Like how we used to previously, like in December, also November, or a time before that, every week we used to have new IPOs, right? But that is not the case. Since the last 2 weeks we have zero IPOs. I think even more time than that, actually, not just 2 weeks, more time than that. We've had zero IPOs. And as I said, that is because a lot of companies will now not be able to get those very high valuations from the market, because the market has corrected a lot. So because of that, they are delaying their IPO plans. But yes, let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Nifty is down 1.9% and Bank Nifty is down, oh sorry, not down, up 1.9%, and Bank Nifty is up 0.32%. So both of these guys have recovered from lower levels. As I said in the previous week also, we might see a little bit of a pullback from here. So where is the market heading next week? So I think the market will not take a straight recovery also on the upside, and the market will not even fall straight on the upside. Like you won't see like any sort of like a move, some straight move like this, or some straight move like this on the downside. So what will happen in the markets next week? So I think what can be the most probable scenario is that we might see a little bit of pullback on the downside, and then we might again see a move on the upside. And now the most crucial zone for you to watch out will be 22,800 to 23,000. If the market continues to stay below this zone, then we can see even more pressure. I think this is the best zone from where the market can take resistance, make a swing like this over here, and then again start to fall down from here, maybe start to make a new low over here. So how are we going to approach this situation? Very simple. I think if the market also has to go up, the market will take one pullback on the downside and then start to go up. So the best place from where the markets can move up over here, just a second. Yes, the best place, oops. The best place from where the markets can move up will easily be 22,400 to 440, or you can say 360 to 440. This 100 point range or like 80 point range can be a very crucial zone from where, if you see that the market is taking a pullback, you can go ahead and take a long over here. Because as I said, the markets will not move down from here like straight up move down from here. Chances are that the markets will again try to go up a little more over here till 23,000 or 22,800, and then start to move down from there. So The best place to take a long will be 22,000, you can say like 440 to 22,360. Okay, 360, 350, 340, basically this range over here. Okay, this 100-point range, and this is from where you can take a long position. Again, you will need to look at the intraday price action and see from where is the market trying to reverse over there. Okay, from where is the market trying to reverse. Okay, so I hope you understand that. And then if you open with a gap up, let's say somewhere near 22,650, okay, or 600 and all these levels, then also I would suggest wait for a little bit of pullback and only then go ahead and take a long position. If you take a long position at higher levels, you have to understand that the market has been moving pretty straight over here. So if you take a long position at higher levels, you might face volatility and your stop loss might get hit without any reason over here. Okay, so I hope you guys understand that. Anyways, in the daily chart, as I said, it looks like we still have a little bit of more up move over here that is left, and after that we might see a rejection being taken from 22,800 to 23,000 for a new low being made over here, which I think, if you see over here, if the market really starts to take resistance, I think we won't really take time to reach 21,000 on the downside. I think 21,000 can be an easy target over here. And before that, if you want a smaller target, 21,600 to 21,500 can be your next target on the downside. So again, the price action is still bearish. The trend is still bearish. Please do not think that the trend is going to reverse. Markets do not really reverse that fast. Okay, keep this in mind. I think going forward also, maybe markets might break 23,000 also, but still markets will not completely turn positive. This will still be just a pullback. So don't get very happy just because the market is starting to move up over here and you start to invest all of your money just right now itself. This is not the time to invest money. As I've been saying, I started saying this last year itself, that don't invest right now. Okay, and that was the reason, because that was the time to sell your stocks, sell your assets, not to invest in them. And the time to invest will not be over here, I think. At least until Diwali, don't think about investing. That is what my opinion is. Again, if you are a long-term investor, you don't care about, like maximizing your gains, you just want to invest in Nifty, then sure, you can invest. I will not stop you over there. But I feel like you should not invest until Diwali. I feel like this correction will continue even more over here, and we might as well go down a little bit more over here. Now, I'm not going to tell you my targets on the downside because a lot of people might think that I'm an idiot. But yeah, keeping targets aside, I just think that this is not the right time to invest. Anyways, talking about Bank Nifty over here, Bank Nifty has given a breakout over here, but currently this is not a breakout failure, right? When will this become a breakout failure? I feel like, for this guy to become a breakout failure is now a little hard. And I'm going to tell you why. Because what will happen over here is that this trend line is ending almost over here, right? I mean, like this support will come where this trend line will end. So even if the market moves down over here, maybe the markets might take support and start to move back up. So this is the scenario that can happen. So if it wants to really be a trend line breakdown over here, or sorry, a trend line fake out over here, then the markets will need to close below 47,800 for one day, and then we can, say that this is a trend line fake out, and then chances are Bank Nifty might easily go down till 46,000 to 46,200. Okay, that can be a very easy target for Bank Nifty if this happens. Okay, but what I think over here is that markets will not go that down that easily over here. So what can happen in Bank Nifty is that Bank Nifty might come down over here, take support from 48,000, and then give one more up move over here till 49,500, or at least till 49,000. Leave 49,500, but I think 49,500 to 49,800 can be a place where Bank Nifty can move, and then from there we can start to see a new sell-off in the market, which can take the market down a lot. Okay, so that is what I think will happen in Bank Nifty also. So keep an eye out near 48,000 to 47,800. If the market is not breaking the zone very fast, you can go ahead and take a long position also over here for an easy target of 49,000. You can easily get these 1,000 points over here, right? But if the market does break this somehow, which I don't think will happen really, but if the market does break this, wait for a daily closing below 47,800 and only then go ahead and take a short position on the next day if you have to. Okay. And on the upside, as I said, that if the market starts to move up from here, at least let the market go up till like this zone, or at least till 49,500, and after that, once you properly get a confirmation, and by confirmation I mean a good selling candle near this, a good selling pressure, only then go ahead and take a selling position. Don't rush into taking a selling position. I hope you understand that, because the market will now try to, you know, take a lot of stop losses out, because now people will think this is just a pullback, let's take a short position, and then the market might reverse up more up on the upside, taking the stop loss of all the sellers, and then it might start to fall down. So keep that in mind. Don't rush into taking a short position. I hope you guys understand that. But yes, that was the market analysis for the next week. So yeah, I guess that was it for this week. And again, a small episode because not a lot of things happening in the market worth discussing. But yeah, I will see you guys in another week again. I hope you guys are liking the new type of videos that I'm putting out. You know, sort of a story type video with a good amount of editing and stuff, and sort of, you know, following a storyline. But yes, if you do have any sort of suggestions for the podcast or for the videos, do let me know in the comments. You can also DM me on Instagram, LinkedIn, anywhere, and I will make sure to read them and try to make those changes if possible. But yes, that was it for this week, and I will see you guys in another week. Bye bye.